So today, we're going to do something a little different. We're going to take a simple 5-step trading blueprint and, well, we're going to tear it apart. Now, the point here isn't to teach you how to trade, not at all. It's about dissecting the logic, how an idea is built piece by piece. Okay, let's dive right in.
I mean, it's a great question, isn't it? Can a simple list actually become a real trading strategy? Like, how does a handful of rules go from being just a checklist to something you can repeat, something systematic? That's exactly what we're going to dig into.
Okay, so just a quick heads up, and this is important. Our goal here is absolutely not to teach you how to trade with this specific idea, or to say, hey, this is a great strategy. Nope, our job is to look at the structure of the blueprint itself. We're just trying to see how it builds from one step to the next.
All right, so every system has to start somewhere, right? It needs a trigger. And for this particular blueprint, it all kicks off with one single piece of information from the day before.
So the first instruction, it's incredibly simple. Take the previous day's candle. I mean, just think about that for a second. This entire strategy, everything that comes after, it all hinges on just one piece of data from the past. It's the foundation, the signal that dictates the whole game plan.
And hey, for anyone who might be new to this stuff, let's just quickly break down what a price candle is. It's really just a simple way to see what the price did. It shows you where an asset opened, where it closed, and the highest and lowest points it hit during a certain time frame. In this case, we're talking about one full day.
Okay, and that brings us to the next logical step. See, the blueprint isn't just looking at the candle. It's making a call. Was yesterday a good day where the price closed higher than it opened? Or was it a bad day with the price closing lower? It's this simple yes or no outcome that becomes the trigger for today's entire plan. It's all about removing any and all guesswork.
So, we've got our signal from yesterday. We know if it was an up day or a down day. Now, let's see how this blueprint takes that one little piece of info and turns it into an actual plan of action for today.
You know, what's really interesting here is how rigid and disciplined this system is supposed to be. If yesterday was a positive day, you are only looking to buy. If it was negative, you're only looking to sell. That's it. The source talks about using a grid system to actually do this, which is basically just a way of setting up your orders at specific price levels, but the main idea, the real core of it, is to decide your direction, your bias, and then just stick with it for the whole day. The goal is to take emotion right out of the picture.
And this quote right here from the source text, this is the heart of the system's discipline. Only buy or sell for today. It's a rule that's designed to stop you from second-guessing yourself or getting emotional. The decision was already made for you by what the market did yesterday. Today is all about just execution.
Okay, so we've got a signal and we've got a system. But does this logic just work for, say, one stock? Or can you use it on, well, everything? The next step answers that.
So, step 4 is to apply this in multiple assets. Now, this is built on a really big assumption that the idea of yesterday's momentum pushing today's direction is, well, universal, that it doesn't matter what you're actually trading. So when the source material says multiple assets, it's talking about a really broad application. We're talking currencies, stocks, commodities like gold or oil, even crypto. The blueprint is basically designed to be a one-size-fits-all logic that you can slap onto a bunch of different markets.
All right, we have the signal, we have the system, we know the scope, but now we get to what is, without a doubt, the most critical part of this entire blueprint, actually testing it.
And this is so important. The source doesn't say, okay, now go use this with your hard-earned money. No way. It says to run this on a demo account. That's a practice account where you're not risking anything real. And the whole point is observation and fine-tuning. This is the part where the idea has to face reality.
And to make all this testing a whole lot easier, the source asks for something called a Pine script. Just think of it like a recipe you give to a trading platform to run the strategy for you automatically. Why is this so crucial? Because it lets you backtest the idea. You can basically travel back in time and see how this blueprint would have done on historical data, over months or even years, all without risking a single penny.
And honestly, this is the key takeaway from our whole breakdown today. An idea on paper is just that, an idea. It's the process of demo trading, of backtesting, of fine-tuning. That's what can potentially turn a simple blueprint into a strategy that actually works. It's the step where theory crashes into data.
Which brings us to our final question, and it's a big one. For any strategy, whether it's trading or business or anything else in life, where does the blueprint end and where does the real work actually begin?
It's one thing to have a plan, right? It's a whole other thing to put it to the test. Something to think about. Thanks for joining me.